Dividends are one of the most misunderstood parts of investing. Some people think they're boring. Some people think they're just for rich people. Others think dividends don't matter at all. When you actually understand how dividends work, especially over time, you realize why they're such a powerful part of long-term wealth. Today, we're going to be doing a deep dive into possibly one of my favorite sectors of investing, dividends. And we're going to be giving you another whiteboard illustration to really break it down and make sure you understand it. Welcome back to the Wealth Manual, where we focus on building real wealth over the long term. If you're new to investing, this video is going to break down dividends very simply. What dividends actually are, how they work, why they matter the longer you invest, and how beginners should think about them. No hype, no shortcuts, just understanding. A dividend is simply a cash payment that a company gives to its shareholders or people who own stocks of their company. When you own a stock, you own a piece of that company. If the company makes profits and decides to share some of that money, they pay dividends. So instead of only making money when a stock price goes up, dividends pay you just for owning the stock. You're getting paid to stay invested in that company. Dividends are paid three ways: quarterly, monthly, or annually. If you own dividend stocks or ETFs, that money will just show up as cash in your account. You can withdraw it or reinvest it automatically, which we'll get into a little later in this video. And that investment is where things really get powerful. At first, dividends look small, and this is where most people lose interest. But when dividends are reinvested, they buy more shares. More shares pays more dividends, and over time, that snowballs. Dividends don't feel exciting early on, but they will later, I promise you. Okay, let's show you how visually dividends actually work. Okay, so we have a company, let's say for instance McDonald's. McDonald's pays dividends to their investors. Okay, and dividends, as we said, is me as an investor getting paid for owning a share of the company. So let's say for instance I have $1,000 invested in McDonald's and they pay a 3% dividend yield. Okay, that will equal $30 per year, and let's say that they pay those dividends out monthly. Okay, because dividends are paid out in three ways: quarterly, monthly, or annually. Okay, so let's say they pay it monthly. Okay, so $30 per year, I would get whatever $30 divided by 12 is. Let me do my math real quick. So $30 per year, that would equal out to, if they pay monthly, $2.50 per month. Okay, now, not life-changing yet, okay? But then you're able to do something called DRIP, which is the DRIP reinvestment plan. Okay, that's when you can actually take this $2.50 that you're getting every single month, okay, and reinvest it back into McDonald's, and that $2.50 will buy more shares at McDonald's. Okay, now I want to show you a graph that kind of really illustrates why DRIP is such a big advantage in investing. We'll do a separate video on DRIP separately, okay, because this is just a whole other topic in itself, but I want to show you a graph of why DRIP can really take your portfolio to the next level. Okay, so this graph kind of illustrates the amazing science behind DRIP and dividends. So at year one, as you can see, let's say we started with $1,000, okay? And we're only getting $2.50 a month, $30 a year, okay? But we're not spending or withdrawing that $30 a year that we get. We're actually gonna reinvest that back into our company, okay? And that $30 is gonna buy more shares, okay? And that $30 is going to start earning dividends, okay, on top of the dividends that we already had. Okay, so year one we had the $30, but we used that $30 to buy more. Okay, 5 years later we have more dividends that we're still reinvesting, and those dividends are earning on top of the dividends from year one. Move 10 years forward, those dividends from year 15 that we have been stacking up are earning on top of these, and you see what happens? It just keeps growing because it's growing on top of itself, and it's earning on top of itself. So in 20 years, you just get this beautiful graph that just continues to go up and up and up and up, and it's compound interest, and it's just stacking on top of itself and constantly growing. So as you can see, I have this formula down here: dividends, you get the dividends, you buy more shares, and then you get more dividends, and then boom, it's just a complete cycle that just keeps going and going and going. And as you can see, it just keeps going up and up and up. And in 20 years, you blink and you're like, dang, I got all this dividends money stacked up, and it just keeps growing on top of itself, okay? So this is a great graph to really give you some insight on how dividends really, really, truly pay you.
One of the biggest misconceptions is thinking you have to pick between a growth stock or a dividend stock. You don't. Many ETFs include both. Many companies grow and pay dividends. As a beginner, the goal isn't to chase the high dividend. It's to build a balanced foundation. Here's what I would avoid early on. Chasing extremely high yielded dividends, buying companies just because the dividend looks good. I promise you that's a red flag, I promise you. And ignoring the business behind the payout, okay? Just because a company has a high dividend yield, that does not mean that they're a good company, okay? A lot of companies will have a higher dividend deal just to get investors to invest into their company, and then all of a sudden, they'll flop. I promise you, I've seen this happen. A dividend is only as strong as the company that can pay it. So for instance, if McDonald's has a dividend, I would be highly invested in McDonald's because that is a blue chip stock that I know is, for decades, has been a great company, right? But if there's a company that just popped up 2-3 years ago and they're paying a 7-8% dividend yield, I'm going to be weary of that because it's like, okay, where are you coming from? You know, are you stable? You know, so definitely you got to think about those things when looking at dividend yields. Dividends rewards patience. And again, that's a key theme on this video. Patience and consistency, guys. You got to be patient with investing, okay? You got to give your money time to work for you. They reward consistency. They reward, you guessed it, long-term thinking. And when combined with time, dividends become one of the quiet engines for real wealth. If you're focused on hearing more long-term money tips, subscribe, like, and comment, and turn on post notifications for the Wealth Manual. We're giving a game like this every single day. I appreciate you guys for watching. Comment if there's any other videos that you guys would like to see, and we'll make sure to get on those. Thank you.